guys, welcome to Sunday Prep. It's October 16th, 2022. Preparing for the week ahead of the 17th of October to the 21st. Starting off, we're just going to look at some economic calendar for the data that's coming out. I think it's a relatively extremely light week. I don't think we have much going on at all. Just jobless claims on Thursday, but the biggest things we're watching for are the start of earnings, finishing up banks on Monday, and then on Tuesday we got Goldman Sachs before the open, Netflix after close, which is big, and then on Wednesday we got Tesla and we got LRCX, which is always big for chips. And then lastly on Thursday we have Snap, along with the rest of the earnings that you see on this page. But aside from that, let's get into some charts.
Alrighty, I'm gonna start us off over here with Mother Market as always. Coming into the week with a relatively light chart, nothing crazy on it. Just a few different levels that I really want to point out. Make sure my stream's good. You guys can see everything. Alrighty, awesome. So the first thing I'm looking for here is this daily breakdown level. So we have not gotten a close below this level this year. We've had wicks. Oh, sorry. Yeah, no, we have not. So we haven't got a close below this level this year. We've wicked here, wicked here, wicked here, here, and we kind of opened below it today for the Sunday session here. But I'm going to be interested to see if can we close below it. If we close below it, we can get what I would call a daily breakdown because we have yet to break down below this level on the daily. So there's two options. Either we continue to hold like this, and potentially we see some type of rally, or we close below it, and that ensues a breakdown. And I'll cover what both those may look like. It's also very convenient that POC is right here. 3600 is also like a psych level. So this zone right here is kind of my line in the sand, my median line, if you will. Anything above it, my targets are going to be this bigger picture structure. I kind of have ES trading in a channel that I grabbed from right here, trading kind of a channel here. And just trading towards structure, liquidity, the 15, the 21, if we go to the upside. Tomorrow, if we start to really get cooking, I'm going to look to see if we could even get this daily gap filled back, fill the candle back up. So we filled back down. If we continue to hold and we really start to look good out the gate, potentially we fill back up. If not, usually around the halfway point is where we kind of stop. Conveniently, I do have a level right there as well. So this will be a first level of resistance if we keep holding into tomorrow. I'm going to look for us to push here. If we could break here, really try to see if we can get to the 15 at 36.68 and even the full daily fill at 36.80. And then above that, I do have the mean and I have structure and everything here. That's why the zone is red. This is where I'd really like to allocate some short risk. If we work our way back up here, 3,700-ish to 3,720, call it that 20-point range. To the downside, if we start to break down below, and we look vulnerable, some targets I have are going to be 3,500. That's about 100 points to the downside. 3,542 as well. This zone right here is another zone that I could see us potentially like coming. If we do break, I could see us bouncing here. And if we get back below here, I'm just going to trade it zone to zone or level to level, the lower we go. Gonna address 3,500 as it comes. As of right now, I do not have a level below 3,500 other than 33.97 and a half, but there will be levels in between. If I look at last week, I did have a few, so I'm probably gonna add this zone as well right here. So 34.76, 34.47. I will probably transmit that onto this chart and then share it to you guys before the open. So that's what's going to be down here. But in the meantime, I'm in love with the levels that I have. I love the structure that I'm seeing in the daily candles. I just like the picture that the market is painting here. With bank earnings, we potentially could see some rally. We also do have some tech as far as Netflix goes, as Fu just prefaced. We have Tesla, we have ASML for chips, we have Snap, which is kind of starts off with the ad names. So those are the few things that I'm excited for personally. Snap is one thing that people often overlook, but they usually provide a good guide for ad names.
Yeah, it definitely sets the tone for ad names like Google,
Netflix,
etc.
and Snap. So that's going to be awesome. That's going to set the tone for Roku and Facebook as well on Snap. So it's going to be an interesting week. I don't personally plan on playing any earnings unless Maybe one of the two names that I'll cover in a second, but more than likely not. I'd probably rather play them after earnings if there was something really bad. But generally speaking, I think this is another week of just flowing with the market, playing SPY, playing SPX, QQQ, and just flowing with the market. And like I said, for me, my line in the sand is above 3,600. Try to work our way back towards liquidity structure. Below, let's try to break down and see if we can hold. To me, it's all about the daily close, and I'm going to keep watching these daily closes closely. If we can close below, I think we could very well break down to 3,500, if not 3,400 in the next day or two or three following that daily close. So that is ES. That is the way I see it. I am going to look at a couple names. Now, I will say I am not in love with any names, really. There's a couple names that I kind of have a side eye on. But as I mentioned, my main focus is going to be the market. So the first name I'm looking for is Amazon here. We kind of just have this big daily trend line that we've been bouncing off of, and we bounced off of last week as well. And then with the hard rejection back down, if the market does base and does want to have a good day, I think Amazon is a name that out of all the names on my list, it's one of the names I can justify to the upside. So with that being said, Amazon to the upside is not bad in my opinion. I could justify allocating some risk at this trend line around this area. Call it 105 to 106, 107-ish area. Allocate some long risk off the trend line if the market starts to look good tomorrow or in the coming days. The next name I want to take a look at is going to be Netflix. So Netflix, as we know, has earnings on Tuesday after the close. And excuse all my messy lines and stuff up here, but Netflix has been known for their huge gaps in earnings. We didn't have it necessarily this last one, but a massive gap here on earnings, a massive gap here on earnings, and we still have not been able to get through this earnings gap. So I have been screaming the last 3 weeks, 4 weeks now, to allocate short risk every time we get here, And honestly, if we get here before Tuesday, I may grab a small lotto. It's going to depend on how Monday and Tuesday session goes before. If we can play with some profits, I think grabbing a put lotto in this zone may be kind of interesting. Obviously, go to zero overnight with earnings, but it also could explode. And that is an area in the chart that I would like to allocate risk. If it just so happens to be right before earnings, I will still consider it. If, for example, we just go sideways into earnings and nothing really dramatic happens, whenever we do get back here, I will be ready to go again. So that is Netflix. And then we do have Nvidia. Nvidia is another name that we we played last week off just this channel. We're still in this channel. Keep trading in this channel. Once again, if the market does decide to bottom, Nvidia could very well go off as well. And then ASML is Wednesday before open. So if there's a positive or negative catalyst with ASML and they say some stuff about chips, this could be a good spot for Nvidia to go long. Down here, like at 107, potentially if we trickle down for a couple days, I think we would have like Monday, Tuesday, Wednesday, and would be around here. That would be ideal, getting it around 107.15. And then I think if we break 100 on Nvidia, it's going to be really, really bad for not only Nvidia, but all chips. So that could easily happen as well, led by the ASML report. So if the ASML report sends us below 100, Nvidia is going to be a huge indicator. If Nvidia falls below 100, well, good luck, Nvidia. The last name that I have is actually going to be Tesla. So as we know, Tesla has been disgustingly weak. You've been doing a great job the last couple of weeks just destroying it to the downside. It has made this massive M on the daily. And as I'm looking, we have now broken, for Tesla at least for the first time, we're breaking this year's lows of 206.86. Below here, I see us going to 182. Below 182, I see 167. Now with Tesla having earnings after close on Wednesday, Prem might be a little hard to play. It might be kind of a lotto, but these are where I see the price going regardless. And depending on where we're at after earnings, I could see this playing out in that fashion. Once again, below 206.86, 182 is my target. That's 24 points to the downside, and then 167 below that. If there was not earnings this week, and even with earnings, a short here near pocket 223, in my opinion, would be great. I don't know how much risk I'd want to put into earnings plays this week. Typically, it's not my style. I don't like to put some lottos on, but depending on where these names are at, I may consider it. Depending on how the week's starting to unfold, I may consider it. In Netflix, most namely, Tesla is another one that I would halfway consider.
I'd potentially look for a post earnings premium crush trade on Tesla early
Yeah,
on, but that's the only thing.
Yeah, so that's one thing I will follow up with. I agree on Tesla. I'd probably be more inclined to do it after earnings because their premium is going to be ridiculously stupid. And Netflix, yes, premium will be stupid, but it won't be as like insane. So I'll take a look at it and see if it makes sense. If it makes sense, cool. If it doesn't, cool. I'm not overly in love with playing earnings anyways. It's just if it's where I want it to be, I may consider it. But for me, that is all my names. I will take a look at the Dixie really quick. Is there anything in particular there? Anything in particular you wanted me to look at, or just cover my thoughts on it, or what were you looking for exactly? So for me, where is it at? Let's go to weekly. We gotta go beyond 20 years now. I don't know. But for me, on old Win Dixie on the dollar, anything above 112, this area right here, it's not good for the market. We're remaining above that 20-year high, which was, I believe it was like right here in this zone. That's why I have it. I was trying to find it back on there, but I couldn't really quick. But above this, I find it very bad for the market. Below it, we can try to see some progress to the upside. So I'll be using this zone right here. I can actually probably just make it a little bit cleaner by I'm going to grab here. Boom, boom. All right, yeah. So this is my zone. Made it a little bit cleaner. Anything above it, I think that's going to lead us to the market being more vulnerable. Anything below it, the market could potentially try to get some relief rally. And yeah, wonder what chart that is. That's going back to 2017. Oh yeah, or 2007, not even 17. Yeah, a massive channel kind of forming. I see it. Something like this. Something like that. Looks a little bit different than what I'm seeing, but yeah, it's definitely interesting though. But generally on the day to day, that's my thoughts on Dixie. Is above 112, 113, a little bit more vulnerable from the market. Below, we can see the market try to rally. But yeah, I mean that's really prep. I will go back to just ES here as I finish up my thoughts. There's not much that I love in the market. We do have earning seasons around the corner. We have banks, we have YM potentially to hold us up. So I'm not gonna sit here and call for a crater this week. There's definitely been Sundays where I've came in and said things look really, really, really bad. And for me on Friday, when we couldn't close below this 35.93 level, I wanted to see where we'd open up at. We opened up below. If we get back under below here in cash session, I think that's going to tell a different story. But as long as we're above, to me, that shows the strength in the market. If we just keep holding, I think we're going to probably go try to test trend line 36.68 in the next day or so. Would not surprise me. So if you have any last comments or anything you wanted to point out, or if Ask or anyone wanted me to look at another name really quick, I can. But like I said, I don't want to waste anyone's time.
Pretty much all I'm seeing. Big focus again on the markets, especially with such a light economic week, and we just need to get through earnings or the beginning part of earnings for tech and see where the market wants to go.
Agreed. I want to see some like a tone be set, right? Believe it was last earnings we started ripping on tech and we had a little rally on it. So in the meantime, navigate properly, manage risk, et cetera, and get a feel for what the market's going to do and navigate earnings. One thing that I always like to be aware of is how does the market react to earnings? In a really bad market, sometimes even, or I guess in market environment doesn't necessarily matter, but sometimes there will be bad earnings and the stock still rips. Sometimes the market will have good earnings and the stock still dumps. So I want to see what is the tone, what is the market doing? Are we selling everything? Are we buying everything? Et cetera, et cetera. So it's going to be the first week where we have some big hitters. We have Snap, we have Tesla, we have ASML, we have all those stuff coming up. So I'm excited to really kind of get a feel for what the market makers and what the market in general is doing.